Good morning all, hope you're doing well. The risk calculation really pumped on the technicals. We were at 5 out of 100 on Friday, but at 97 now. We've actually increased since I've reset it about 20 minutes ago, so we're climbing higher. And basically this is measuring all these instruments here, and it is what it is. If we're going to be pumping on risk, this is going to improve. And obviously 100 is the max, so it could theoretically be a place to take profit. You're looking to buy when it's nice and low. 5 out of 100 was very low. It's a good time to get in, and perhaps potentially if we get to 100, it might be an idea to de-risk, take some profits maybe. But that's how we use it anyway. So wait for it to get nice and low, looking for opportunities to buy, and then you're looking to TP when it's nice and high. Robot time quickly. Right, so we are doing well. We're up quite a bit. It's not an amazing amount, but it's not bad. We're positive. We had a couple of dodgy trades. EJ triggered. I wasn't sure about it when it did, and that went to its 50% ADR loss. So there's a fairly significant loss there at £7. But we had a good AU long. All right, so it's making a profit. But we've got a couple of dodgy ones. For example, EJ wasn't that good, and GU from yesterday as well. I think CJ wasn't too bad. All right, so current trades are looking a little bit for dollar strength. So this is what I'd imagine might be the case today, because we've got the durable goods and we've got the PAL speech tomorrow. So I think the US yields are possibly going to strengthen from the uncertainty, and as a result the dollar might also strengthen as well. So we'll make this videos a little bit quicker, because yesterday was over 12 minutes. It was a little bit too long. So there's gold for the buy, and I'll say in Discord, you stipulate your stop loss here or even there, but the wider stop you've got, the less reward to what you're prepared to risk. So if you've got a tighter stop, much better. If it's a really wide stop, you're not really looking at a great risk to reward, are you? But it depends on your risk parameters, on your threshold and your tolerance. Maybe perhaps you don't mind a wider stop if your sizes are absolutely tiny. Maybe it wouldn't be too bad. But if your sizes are like a normal size, you probably want a little bit of a tighter stop. So you could enter 1901, 1895 is definitely okay, isn't it? Even so much as 1888 stop loss, probably okay as well. So that's how you use it. Get the crossover, stipulate your stop loss, and then you're looking for a good reward for what you're prepared to risk. Yeah, US 30. Actually, I might start at the US 500. But yeah, let's start at the US 500. I'll show you what I mean, because there's congestion here, and I'll show you. So basically, US 30, the Dow Jones, is lagging behind the S&P in so much as that we had this congestion on the S&P and we broke out, and that's what we want to see on the Dow Jones. So there's the buy from yesterday's video, and of course we dipped a bit below, which is fine. This meant they got paid a little bit and then we pumped. So this is the congestion area, right? And then we're having the same on the Dow Jones, and that's why it needs to clear first. I use the analogy of an aeroplane, and needs to unload cargo before it can take off. And this is the cargo. This is the weight of dead money, dumb money, and their positioning. So it needs to shake them out, and once they're shaken out and they've ejected from the aeroplane, then we can start pumping. We can start flying, basically. But the reason why this has got heavy is because they started going long. All right, started going long, so down, it really fell, and it crushed them, and it has to crush them in order for the airplane to fly, and that's the important thing. So we've got congestion, we've got like cloud cover, and we need to clear that turbulence, and then we're going to pump higher, right? That's the Dow and the S&P. We'll do DAX, and just make it a quick one really. And so I guess potentially we're going to see a strong USD with those yields, but it looks like we're quite risk on, so we have to be a bit careful. And there's your buy, which we can map a box there. So definitely a lot quicker video today, and I'm going to make them a little bit shorter because no one really wants to watch a 12-minute video when it can be like encapsulated in, you know, 80% of that time, or even half that time really. So there's the buy. You're looking for a stop loss here potentially, and then, you know, you're looking for a good reward on that. So just to recap, really, we kind of want a bit of dollar strength on for the robot, and also the Kiwi CAD. Just a caveat there is that these two should have been deleted because what happened is that they had a wrong stop loss. But I was wary about, I was loath to exit those because I knew it was going to fall. Right, so this was obviously like a pump to take stops, and that's why we didn't exit the Kiwi CAD. Had we have had like our stop loss, we would have got stopped out. But I knew this was possibly going to be fairly fake, so we'll have to see how we go. If we go above that high, we'll just delete these two, and these are two bad trades because they've got the wrong stop loss. See how wide that stop is. We can't have a trade with 300 pip stop loss. It's just ridiculous. And so obviously that's now been rectified and fixed, and so the stop loss is 30 pips, not 300. So if we go above that high, and perhaps we create a new candle above that high, we'll just delete these two, and then that's fine. But we shouldn't have a trade with that wide stop. So ideally what happens is that we come down below and the trading stop will kick in, and then the next time we get a Kiwi CAD, it will have the correct stop loss distance. We can't have anything like that. That's just crazy. And that's it. So I'll try and get a bulletin early tomorrow. Don't forget we've got durable goods today, and we've got the Powell speech tomorrow, and no doubt the banks and the big fish should be looking for direction, and lots of whipsaw, and probably a bit of a frenzy as well, I'd imagine, on positioning. And don't forget we're very high on this, so if you did get nice and low entry, might be an idea to take profit, or definitely to scale out if you had you know, a decent size on risk. Perhaps you were long on the S&P, which would make sense if you were, because we were, you know, we were risk on the big picture, and so you would be quite wise to buy the S&P on the dip. But however, if we go red here, that's a little bit of an omen, especially if that's red and then we start going red here, then that will be a bit of an ominous sign. So I'll speak to you guys soon. Remember to trade safely, and let me know if you need any help as well.